What's up everybody, Tom here with another video. Today's video is certainly a special one. We're going to be talking about this 50 exponential moving average point for the S&P 500, such an important zone for the bulls and the bears. We'll be talking about the important dates coming up and of course that quadruple witching event. Did CPI have anything to do with this? Let's talk about it and discuss right now. Stay tuned everyone. Okay, everybody, well, here begins our market recap for, of course, the markets closed the 14th of September 2021. And when we're taking a look at this heat map of the S&P 500, I'll tell you what, it wasn't much green. It was really just flat or down. Big banks were down quite heavily. We also had energy falling off after a nice gain the previous session. And the FANG stocks were flat except for Microsoft that announced a buyback, I believe. If we take a look at Apple, though, this is going to be the chart that we'll watch today. And we will be taking a look at our technical analysis on Tesla, Apple, AMC, of course, Nasdaq, gold, and so many more. There's plenty of things that are looking very good in the markets right now in terms of technical breaks. Let's now talk about the indices, though. What actually happened in terms of the psychology of the market? Well, as is customary, the retail hour shenanigans were happening again. We saw a bull move from the futures. It opened above, sold off, buy the dip kind of ensued, and then of course Wall Street sold off into the close, which is always really showing us that they're playing with retail. They're playing with the idea that people are very much conditioned to buy the dip, and they're trying to get them on leverage options. We can really discuss that when we take a look at the SPY calls that are open. You guys will see how many people suddenly turned bullish in the last couple of weeks. Now we have a look at the sectors. It's all across the board, as we said. Nothing in particular stands out there. I don't really think there's anything to read into too much there. Let's have a look at the fear and greed index. So we're sitting on a 31 fear, not an extreme fear, which is important. If you're extreme fear, it's unlikely the market goes down. Remember, when people are fearful, it's better to be greedy. When people are greedy, it's better to be fearful. I think that this reading has been like this for a while, though. So it's more about understanding which bits of this reading are showing up. The big one for me is probably going to be put-call ratio. So we see here during the last 5 trading days, volume in put options has lagged volume in call options by 54.11% as investors make bullish bets on their portfolios. Now, it's not so much that figure, because that's been consistent for a while, but we do want to see a lot of calls being opened, and I'll show you how you can see that in just a few seconds. Let's actually move over to the VIX just to talk about calls and puts, and you'll notice that the VIX is still underneath 20 until it really breaks past this level, and in fact breaks past something like a 23, 24, 25. We're not in what we would call a bearish controlled market. At the moment, the trend is still quite firmly intact up. And remember, 50 EMA is one of the key points that many people are looking for on the market. So close underneath that, you'll expect the VIX to really spike up and then for the bears to try to take control. We've also got quadruple witching event. If no one's aware of what that is, it's when all 4 major kind of options markets expire at the same time. We've got stock index futures, stock index options, stock options, and single stock futures. When they expire simultaneously, we do see a ton of manipulation. So it's not for, I guess, an amateur trader to trade that day. Generally, there's all sorts of manipulation. It's very hard to read the charts, and we've got to expect that the Thursday and more importantly, the Friday session when it expires, there can be a lot of random movements as prices rebalance. People think about what they're going to have to execute, of course, and this is a really important factor in the markets. So the SPY is here. We see the close. It's right on the previous wick low. It looks bearish. This is quite a few days in a row now of rallies in the morning, sell-offs during the day kind of events. And we've got 4 red candles in a row. This is the real market, not the futures. We'll take an in-depth look very, very soon. We also know our 50 exponential moving average is coming up very shortly. So that's sitting around that 441, 440 zone. And why I bring this up straight away in the video is because I wanted to discuss options by strike coming into this expiry. And I wanted to talk specifically about how many people have been trapped into the bullish curve recently by Wall Street. Take a look at this. That's an extreme amount of calls expiring this week exactly around that 450 level. Then we've got even more sitting around that 460, etc., etc., etc. So 460, 455. There's so many calls there in proportion to the puts. This is what Wall Street likes to do when you see a huge proportion of retail traders taking out calls in the SPY or taking out calls, of course, in any other stock. It does tend to lean itself towards the downside. But the most important thing is we've also got some really interesting levels here, because we could see the 440. The 440 has a mixture of calls and puts on it, so very, very even there in terms of it. And these are the levels that become the put wall. So basically when the options expire, all of these levels here become those levels that we expect technical support at. So we expect technical support around that 440, 441. Why? So many options there. But we also don't expect it to get above this one because they don't want to pay them out. So you get that trap zone. And then after the options expire, you look for the next month, you look for the next couple of weeks, and you try to understand what's going on. Remember, still so many calls in October as well, sitting around the 450, an extreme amount in comparison to all of the negative bets being played. This is something that we all should watch out for, and it's certainly something coming into the weaker statistical months of the year that is important. Remember, price action is always number one thing you should be doing. This is just interesting facts that go along with your price action. But if you're getting the story coming from all angles, then it can be a little bit stronger in terms of your bias and, of course, in terms of your conviction for your trades. I've brought up the calls in terms of just the open interest, and I just wanted to show you guys how much open interest is around certain points. So you'll see here the 450, and you'll see the calls, and we have 155,000 open interest there. So some pretty significant numbers. Now, if we scroll down through, we get into the put side of things, and this is just Yahoo. You'll notice that we have some extreme put options at certain strikes, but the big ones that I think are starting to appear here, and we expected this, is that the 400s are starting to get fairly extreme. We've got 410, we've got 430, big numbers here, and then of course we've got the 440, which is around 84,000. So these are all becoming put walls. The options don't tend to expire underneath these zones. So I think 440 will be a key zone. And if we move underneath that, we're looking at the 430. There's not that much in between these areas. You know what I mean? Compared to, look how big a number there is here. Look how big a number there is here. Everything in between is much smaller. So if 70% of options expire worthless by statistic, and we have heaps sitting at a zone coming into expiry, if you are going the bearish side or you're looking for those supports towards the buy the dip, you're looking for the key zones of expiry. That's one of the things that we always do. Let's move over now, just talking about CPI. So yes, it came in under expectation. Do I think anything of it? Not particularly. I think that this move yesterday, even if like newspapers or information is being sent to you saying, oh, it's gone down because of this reason, I tend not to really look into it that much. Remember, at the moment, the news is really just about what is the Fed going to do. It's less so about the economy. It's more about what is the Fed going to do. Are they going to taper? Are they going to change interest rates? That's the true story that's going on. Interest rates will always be one of the big stories here. We did see gold spike into it, and there was some nasty stuff that happened around the news. We saw it instantly spike down, then fully reverse that action. Now, that is a stop hunt. There's no doubt in my mind many people got stopped by the news. They would have had their stop losses probably underneath here. They get spiked off and it fully reverses and closes above. And you'll notice right now it's basically flagging above this zone. So we've got a nice consolidation above the resistance. Now, why is this so important? Because when we go over to the daily, you'll notice the closure is above a lot of these wicks. So this is a fairly significant discussion point here. We've had support around that 1802. We've closed above all the moving averages. We've now consolidated for the last couple of hours sitting above that, and we're looking for that 1820, 1830 zone. This is a fairly strong technical indicator. Whenever you close above this, what are you really doing? Well, there's all these little cells here, all the nasty cells that were trying to sell down gold. They're sitting here and they're getting hit up by, of course, stop losses or having to move their stops out or getting converted or getting margined, who knows. And this price action, although it's still got moving averages everywhere, is now going to be able to consolidate above here, have all of these moving averages as dynamic support, and hopefully now move towards the 1820, 1830. So for gold traders, it's the first positive sign you've seen in quite some time. Let's move over now to, of course, Tesla. And if you're also a silver trader, it'll be pretty similar. It's a similar type of thing. What gold does, silver tends to do. So you can go check out those charts, but we've got a lot of other things in the stock market to cover. So Tesla held up, I think, remarkably well considering what the market was doing with the Nasdaq moving down, etc. And it shows there are bullish intentions here. We've been talking about how this chart has really been looking much, much better in the last couple of weeks. I still think it looks much better. Obviously, if the market falls off, well, Tesla will come down with it. But from a pure price action, we have an amazing trend line that's been incredibly consistent. We have, of course, that really defined support, we hope now, that's coming through this level here, which is around that 725 area. And of course, we have our defined resistance. Now, I believe if we kind of close above 760, even though our expectation was 775, 780, we could even get a break past that. And really for Tesla, what it's about here is closing this weekly high. Remember, we had a nasty close in the previous session. Imagine if we closed above or even bullish above the 740 area. This has not happened ever since that crash on Tesla that happened early 2021. And it was a crash. I mean, that thing crashed down fairly hard. This would be really big step of recovery here. And we've seen Tesla move against the market before. So retail tends to just do what it feels like. When this is a retail heavily traded market, we've seen a lot of options expiries be manipulated by Wall Street here over the last coming weeks and months. If it gets through, if it closes above, I still think it's a significant big move that could be incurring. And you're talking about at that point starting to move back up to the 870, 880 territory. I would love to see it. Let's see whether we get the closes that we need. And of course, options flow is starting to come in. Look at that. Whoa, that's some calls. Holy moly, those calls coming in here. 78.46 million call net positive on the October. These are huge bets, guys. I got to say, that's big. That's big. And yeah, not bad. Go have a look at your options strike rates through Yahoo Options or something and have a look at these rates, because that's massive calls coming into Tesla, and it's really surprising to see how big that is. Algo flow was also with Tesla, even though the price did decline. You obviously saw that huge amount of options coming through, so something's going on there. That was very, very interesting. And then we move on to AMC. And AMC, well, it got to our target. We created the long leg doji. We moved underneath the long leg doji, and now we've slapped back into our trend line. So nothing bad in terms of price action. I think we were very clear that this was in a very important level, and we were looking for a closure above this zone to allow that $60 to be opened up. And I like that a lot. If it had occurred, I would have been very, very bullish on it again. But let's have a look at the actual trend line, because let's think about how good has this trend line really been. So we've got 1, 2, 3 kind of touches, maybe 4 if you're arguing it a little bit. Didn't really touch, but it came down. Now, when it comes down with this much ferocity, as in it's a falling knife, it's not really the best idea to just pick it up. Generally, you'll be looking for smaller time frame lightning bolts, smaller time frame like movement in the right direction. And I think this is a super important zone for AMC to hold. Again, it can buck the market. The market could go down 5% and AMC will do its own thing. But I don't like just buying a very fast, quick pull down. Like over here, you got like a double test of the low. Over here, you got some consolidation and then a breakout. That's a lot better than just saying, oh, yes, it's come down, let's pick it up. If you do this, it's like one of those scaling opportunities. You scale in, and as you see the market do the correct thing and go in your direction, you start to reward the trade by adding the extra value into it. Yeah, I think that's probably the better thing to do. Let's have a look at options flow and, of course, the algo flow here. And the algo flow was negative for the session along with price. It was pretty much matching it, which means that everybody was really doing the same thing. There was no real funniness there. And then we'll move over to Apple. And Apple, as we know, it's a massive stock. It kind of derails or makes and breaks markets. And this whole App Store thing, I think it's pretty serious, really. It's not like it's going to kill Apple. Of course it won't. But we had the event. I actually haven't even looked at the event, but I assume it's just the same iPhone with 120 hertz and nothing much going on. And then next year will be the big one. But the market has sold it off. Let's take a look here at the 2-hour chart. And let's just talk about this key level that we discussed yesterday, 148.72. So let's say the market comes back up and tests this and rejects this zone. This should have been and is a very important support. Now, it's not because it's a great level like, or fancy 150 or anything like that. It's just because the price remained trapped for a few days between this area. We saw 2 dailies kind of come test this, then we closed below. I think that kind of bodes a little bit negatively towards the market, and it's kind of in line with our indices discussion soon. So we come up to this level, and at this level, we could expect some bearish pressure. Next level would be around that 145, 144, kind of right around here. And then, of course, 141 is the bottom of this range. So Apple is looking weaker, but yeah, it's more of a day trade scalp if you're interested in that. Flow was negative into the session and continued to be negative. Though it did pop. And the interesting thing about that is it did pop at the start. And remember, somebody was asking yesterday, do you see algo flow come through? Well, we saw a massive discrepancy between the price yesterday of Apple. And then, of course, also we saw that massive algo flow that was coming through. The morning popped about 1% up. And then after that, it started its negative move. So yeah, you can definitely see that the algo flow does show some of the close percentage. And then what happens with between the close and the open can also be dictated a little bit too by that quick algo flow near the end of the day. You can use that if you're interested in getting access to it. Of course, 7-day free trial down in the description below. Just join the Discord channel, our Discord channel, and 7-day free trial on fxevolution.com. You might as well give it a shot. IWM 220. Support coming across here. It's a key support zone. I'm not a big fan of trading the Russell 2000, but that is the support. So if you like it, that's the first support. And then after that, you're talking about that 211, 210, or even 208 area. Keep a watchful eye and be very careful. Now we move over to the most interesting one at the moment, and that's the S&P 500. We've talked about the 50 exponential. This has been an incredibly strong buy the dip level. If you're a buy the dip kind of person, you're right in the zone. You're right in that area where you've still got to start really paying attention to your stocks. If that's what you like to do and you like to just buy the dip here and you've been doing it, well, you're coming down to the right point. I would like to make just a quick date reasoning here though. So we've talked about this one before on the channel, and this month it actually started pretty close to the top of September. We started to see decline. But look at every other month. So 16th down, okay? Then we've got 13th, 14th, down. Then we've got 14th, 15th, down. Then we've got 7th, down, comes back up, 17th, down. Now, what you'll notice is that almost every single time it hits this 50 is a very similar date. It's really crazy. It's almost always the 18th or 19th. And it's always dropping around that 14th, 15th of the month. So that's been fairly consistent. It's gone earlier this time. It's all got to do with the 3-week options in the month, the big options expiry, but it has been a consistent thing. So if you like those kind of dates and you like that kind of method, then yeah, you can see why this zone's coming in, and you can also recognize the trend that's happened. If we get underneath this area, then I think the gloves are off and the bears start to really put pressure on. At that point, we'll be talking about the key levels. Obviously, this level will be important, but I think we're starting to talk then about a fully fledged 8 to 10% pullback, because we did know the bears have tried to take control of the market, and that's pretty important. 8% puts us around 4,200. And I think that makes a ton of sense around that level. And we'll talk about the puts that are there. You can also see the volume profile is incredibly huge here because of all the trade that's gone on before. So there'll be a lot of buyers and sellers here if it is to occur. I want to discuss this though, and that is what we did in the live session over the last 2 days. So we correctly analyzed, I believe, this 20 moving average exponential on the daily. We knew that that had bounced twice off. When you bounce so heavily off a level, what's going to happen if you close below and retest? It's what we call roll reversal. And you'll notice we boxed it up. You can go watch our live streams if you want to see what we were doing during the live chat before it even occurred. And we boxed it up when we talked about caution at these zones, because the resistance here, this is where the bears are going to try to absolutely smash it down. Now we got sell off the previous session, a big rally. And then of course, in the previous session, we had a big sell-off occur again after rallying in here. Now we're at a new low. So it seems inevitable that we're going to try to test at least the 50 exponential. which is a few points below. We've closed consistently on this low though, this 44.50 area, which is a little annoying. I'd prefer it closed slightly lower, so the follow-on effect is more, I guess you'd say, statistically likely. But yeah, 50 exponential seems like the go here. Then we find out whether the bulls or the bears want to win. This is such an exciting week, honestly. It's getting exciting from the market perspective. We move over here to the Nasdaq, a similar box structure, similar thought process. We close outside of our massive channel range. We then get support, that becomes resistance. You can see the double dip, the rallies in the morning, trapping retail, and then the sell-offs by Wall Street into the end of the day. If we take a look at the daily here, you'll notice that it's nowhere near as weak as the S&P has been. We've got that 15,300, and then we've got the 15,200. This 15,200 is pretty strong. We have previous resistance, and if we actually move over to a chart here with all of the moving averages, bring on the Nasdaq, you'll notice around that 15,200, the 50 exponential moving average will be there as well by the time it comes down. So very cool level. Super interesting. Long leg doji, not closed below, so it's not like it made a true decision, but it's all happening this week, and I expect fireworks to happen on the quad witching event. Basically, once that's closed off, we should have, I would hope, a really clear direction to whether it's a buy the dip again or whether it's a bearish market that's coming in here with a decent correction during a time that's very well known to be the correction. Let's move over to Bitcoin, because Bitcoin is a market that's actually bulling. It's hit the daily 20 exponential moving average. We know it loves this particular zone because during the bull market recently, it's bounced off it quite a few times. It's now hitting it from the resistance up, and we have a similar type of Wyckoff accumulation going on here. Let's have a look at the 2-hour chart so we can understand it better. Well, firstly, no closure has occurred above 47.5. I like above 47.5. We've got a pin bar rejection here at this point. Would I sell it? No. Would I be looking for a closure above this? Absolutely. And it kind of looks very similar to a Wyckoff. The reason, we get that initial crash, we get some pullbacks into the zone, and then of course we get that final tester. Now this happened off the back of the Litecoin Walmart rumor fake news story. Bitcoin had no business coming down this low. You'll notice it just randomly hit lower, and Litecoin didn't actually go under really the price that it boomed off. So this, I believe, was a trap. If we have a look at accumulation events in Wyckoff, you'll notice you often get this spring or final kind of smash off that extracts maximum value. It's called like a maximum pain theory, I guess some people would call it. And we do get that spring, we get the movement up, and now we're at that resistance. So what I actually wouldn't mind here is to break 47.5, consolidate, and then break long. That would complete a very nice Wyckoff accumulation, and we can move back into the highs. I think it's pretty cool. What do you guys think about this one? Is Bitcoin going to go back into the 50,000, maybe 51,000, 52,000 range? If you take the range of the Wyckoff accumulation and extract it out, it goes really, really high to a 50K plus. Do you guys think that's going to happen? Let me know in the comments down below. Another thing, BTC shorts still remain low, which means it's not really huge whales trying to short against Bitcoin. It was just a standard crash, and I don't think there's something more sinister going on here, which is good news. Remember as well also that the dates and the rates that they're coming out this week, we do have some big things with retail sales Thursday, core retail sales coming out 1 hour before the market open. And then we've got the quad witching event. So there's plenty of news still coming. There's plenty of information still coming out. And just remember that while we expect a pullback in the market during this time of year, and it may last 1 to 2 months, you never know, because statistics go with that kind of favor. If we come back in 6 months' time during these kind of big bull runs, 93% of the time, the market has been up 7.9%. So you've got to be optimistic even during times where it might not seem so optimistic in the markets. Thanks so much, guys. Remember to subscribe, smash that like button if you enjoy it. And I know it was a long one today, but I think there was some great information in here for everybody.